So you're basically saying, so the money stays in the policy. Like the money never, when they say, here is your 100,000, okay, that money does not come out of your policy, correct?
No, they're giving it to you out of their own checking account.
Yep.
And they're going to charge you interest because it's a loan. And that interest is going to be around 4%.
Yeah. No, I just did this with mine. You know what mine was?
What?
1.5.
Interest?
Yeah.
That's ridiculously
I know. It's 1.5% interest.
Wow.
So,
okay, but anyways, yeah, you have the 100,000 that you get from the insurance company. They charge you whatever they charge you.
Yep.
However, you still have all, say, 110 in your policy invested earning interest.
Correct. Yeah.
So
you're just using an arbitrage at that point in time. So the loan really doesn't as long as you're earning interest in excess of what that loan cost you. Okay. Actually, yeah. Then it's basically a wash.
Yeah. And I mean, long term, these policies average about 6%. So, if you're paying 4% on a loan and you're earning 6%, you're actually still making money having a loan outstanding.
Yeah. Yeah. Obviously, I don't want to do that like all the time, but here's the other part of that. What did you use the money for?
Right? Exactly.
Okay. So this is where we get into the problems of taking money out of your cash value life insurance policy, because it should be for something that's going to be worth the cost of not only borrowing, even though that could be basically a wash, but it could be for something. Well, I'll give you an example. I mean, one of my clients bought a business.
Yep.
Right. He bought a business that a cash-based business that is probably going to, start earning him $200,000 or $300,000 a year, maybe in a year or so. Okay. Cost him, let's say $500,000. He took $500,000 out of his cash value life insurance policy for this.
Okay.
Okay. Was that a good use of that money?
Yeah.
Exactly. Right. Why?
Yeah.
Because I trust that he's going to use that 500,000. That's essentially not going to cost him anything out of pocket to then create, whatever that 500,000 is going to generate in cash from there.
Yep.
Okay. Now, I probably will have him start taking some of the profits to return the investment back. Okay.
Yeah. You go. Yeah.
Yeah. Would that make sense?
Yeah, I mean, you want to pay, even though you're borrowing money from yourself, in essence, you still want to pay it back, because otherwise you're not going to have access to the money again later down the road.
Exactly. So I want to return the investment from the person that sourced it, which was you, but it should it should go back to, return of investment at some point in time. Now, that's a proper use of that, acquiring a business. Okay. What would be another constructive use of that money?
I mean, I've had people take out a loan from their life insurance to expand, remodel, new equipment, like invest in their business.
Yeah, or buy a building.
Or buy a building for their business.
Yeah,
but
so I've seen that too.
Yeah. Yeah, those are good uses because you're investing in yourself, in essence, right? You're spending this money so that the practice can make more money in the future.
Now, look, not only that, but you do not have to go to a bank to get the loan. You don't have to all of a sudden have a payment to pay the loan back, because there really is no payment schedule.
Yeah, it's like complete freedom. Pay whatever you want, whenever you want, however you want.
Yeah, to pay the money back. So there's not like an amortization schedule. You can create one if you want to, but there's no amortization schedule where the insurance company is saying you need to pay us back at this point. They're not going to do that. Okay, so it is on you to do that, and it's something that we would encourage you, that you certainly would want to do. But you're not required. Okay. But all we're trying to say is, like, you're using your own capital to go out and purchase an asset that's going to create more capital for you, essentially. Okay. that's a proper use of that. So buildings, expansion projects, real estate, that's going to be like really good real estate. What else? I mean, you could, obviously your own training, those would be some things that you could do that are going to make you better or more valuable. I mean, I'd rather take it from somewhere else, but that could be something, as long as it's going to be something that's going to create more value for you at some point in time.
Yeah.
So, but that's not what we've been seeing lately. What have we been seeing lately?
I'll say in the last, say, 6 months, we have gotten more loan requests than I can remember in my entire time here.
Yeah, me too.
And it's a lot of requests just for working capital, or basically it comes down to people are taking money out because their business isn't making what it needs to.
Yeah.
Right.
That it would be a last resort. I mean, a real last resort.
Yes.
For something like that.
Yeah. Or, another example I had recently was someone who had to take a loan from their life insurance because they hadn't paid in enough taxes throughout the year.
Okay, there you go. So tax liabilities.